Thousands of Florida condo owners didn't see this coming. Values are falling, costs are exploding, and buyers are disappearing. These 10 cities are now ground zero for something serious. Number 10, Sarasota. Sarasota spent years building a reputation that felt almost untouchable. Buyers weren't just purchasing condos. Buyers were purchasing certainty. The beaches were clean, the skyline kept improving, and the steady flow of retirees and second home buyers created the impression that demand would never disappear. People paid higher prices because Sarasota was seen as a long-term safe bet, not a gamble. Daniel moved from New Jersey in 2022 after selling a family home. Daniel paid nearly $610,000 for a bayfront condo, confident that Sarasota would protect the investment. For a while, everything looked fine. But by 2026, Daniel noticed something unsettling. Units in the same building started listing closer to $430,000, some even lower. That wasn't just a small adjustment, that was a major shift in expectations. But the drop in value wasn't the only shock. Insurance costs that once felt manageable suddenly surged. HOA fees rose as associations began preparing for stricter reserve requirements and structural compliance. Daniel's monthly expenses increased significantly, even without factoring in the declining property value. Then came the special assessment notice. The building required major structural work and reserve funding adjustments. Daniel was responsible for over $25,000. That wasn't part of the original plan. Daniel wasn't alone. Across Sarasota, owners faced similar choices: sell at a loss or stay and absorb rising costs while hoping the market stabilizes. At the same time, listings multiplied, units sat longer, buyers hesitated, and hesitation, more than anything else, started slowing the entire system. The bigger question now isn't whether Sarasota will recover. It's how long confidence takes to rebuild once buyers stop assuming prices only move upward. Number 9, Bradenton. Bradenton grew rapidly because it offered something Sarasota couldn't anymore: affordability. Buyers priced out of Sarasota saw Bradenton as a smart alternative. The beaches were nearby, the lifestyle was similar, and the lower entry price made it easier to justify the purchase. Melissa relocated from Michigan and purchased a Bradenton condo for $385,000 in 2022. Melissa expected steady appreciation and manageable monthly costs. Instead, Melissa watched nearby listings fall below $290,000 just a few years later. But the real pressure came from ownership costs. HOA fees that started near $400 per month rose steadily toward $800. Insurance premiums increased sharply. Mortgage payments, insurance, and association dues combined into a much heavier monthly obligation than Melissa anticipated. Potential buyers noticed the same trend. Renting began to look safer than buying. That shift slowed demand dramatically. Meanwhile, inventory climbed. More sellers entered the market, but fewer buyers stepped forward. Sellers began reducing prices, hoping to attract attention. But when price cuts become common, buyers gain leverage. And when buyers gain leverage, markets rarely stabilize quickly. Bradenton is now in a transition period. Sellers are adjusting expectations. Buyers are watching carefully, and nobody wants to move too quickly, because the next move could determine whether losses deepen or stabilize. Number 8, Daytona Beach. Daytona Beach built its appeal around accessibility. It wasn't the most expensive coastal city, but that was exactly the point. Buyers felt Daytona offered reliable value without extreme financial risk. That perception fueled strong demand during the surge. Carlos invested in a Daytona Beach condo expecting reliable rental income. The purchase price was reasonable and rental demand looked stable. But over time, the situation shifted. Comparable units began selling for noticeably less. HOA fees increased as associations prepared for long-term maintenance and structural compliance. Insurance premiums rose, adding another layer of cost. Carlos tried to rely on rental income to offset expenses, but competition increased. More units entered the rental pool and occupancy rates declined. Income became less predictable. Now Carlos faces the same decision many owners face: continue holding and absorb rising expenses, or sell into a market where buyers have more negotiating power. Daytona Beach hasn't lost its appeal entirely, but the sense of financial predictability that once defined the market is no longer guaranteed. And when predictability disappears, hesitation replaces confidence. Number 7, Orlando. Orlando always seemed protected by its economy. Tourism, conventions, and steady population growth created constant demand. Investors believed condos near major attractions would always perform well. Anthony purchased an Orlando condo expecting short-term rentals to cover expenses. Initially, occupancy was strong, income was steady, but over time, more units entered the market. Competition increased rapidly. Rental rates softened. At the same time, HOA fees climbed and insurance premiums rose significantly. Anthony's monthly expenses increased far beyond original projections. Rental income could no longer fully offset ownership costs. Listings grew across multiple Orlando neighborhoods. Buyers became more selective. Financing became more complicated for older buildings requiring compliance upgrades. Before continuing, subscribe if you want to stay ahead of market changes most people don't see until it's too late. Orlando still attracts visitors and residents, but ownership costs are rising faster than income potential in many buildings. That imbalance forces buyers and investors to rethink assumptions, because even strong demand cannot override financial reality forever. Number 6, Cape Coral. Cape Coral attracted buyers with its canals and waterfront lifestyle. For years, waterfront condos represented opportunity and growth. Buyers believed location alone would sustain long-term value. Rebecca invested in a waterfront unit expecting steady appreciation, but rising insurance costs dramatically altered ownership expenses. Waterfront exposure increased risk calculations for insurers, and premiums followed. HOA fees rose as buildings adjusted reserve funding and maintenance planning. Special assessments became more common as associations addressed structural needs. Listings increased as some owners chose to exit rather than absorb ongoing cost increases. Buyers, aware of rising expenses, negotiated more aggressively. Waterfront views still attract attention, but buyers now look beyond scenery. Buyers evaluate financial sustainability carefully. Cape Coral remains desirable, but expectations have shifted. And shifting expectations reshape markets faster than most people anticipate. Number 5, Jacksonville. Jacksonville gained attention as one of Florida's more balanced markets. Prices were reasonable, growth was steady. Investors saw Jacksonville as less volatile compared to other cities. Mark purchased a Jacksonville condo expecting gradual appreciation. Instead, Mark saw comparable listings decline while ownership costs rose. Insurance premiums increased, HOA fees rose to meet reserve requirements. Rental income did not increase at the same pace. Buyers became more cautious. Questions about financial reserves and building conditions became more common. Sellers faced longer listing times. Jacksonville still benefits from strong fundamentals, but rising ownership costs create new pressure points. Markets built on stability can still experience adjustment when financial conditions shift across the entire state. Number 4, West Palm Beach. West Palm Beach experienced rapid growth fueled by luxury development and high-income migration. Buyers expected long-term appreciation supported by strong demand. Jennifer purchased a luxury condo expecting continued growth, but insurance costs increased dramatically, especially in coastal towers. HOA fees rose to address compliance and reserve funding. Luxury buyers became more selective. Listings remained active longer. Price adjustments became more common. Luxury markets depend heavily on confidence. When buyers become cautious, transaction volume slows quickly. West Palm Beach remains attractive, but rising ownership costs challenge assumptions that luxury markets are immune to correction. Number 3, Tampa. Tampa experienced one of Florida's fastest growth periods. New residents, job growth, and development fueled strong housing demand. Kevin invested in a Tampa condo expecting appreciation to continue, but rising insurance costs, higher HOA fees, and increased inventory slowed price growth. Listings increased significantly. Buyers gained more negotiating power. Sellers adjusted expectations. Tampa remains a strong city economically, but housing markets must align with income levels and ownership costs. When costs rise faster than affordability, adjustments follow. Number 2, Aventura. Aventura built its identity on exclusivity and stability. Buyers viewed it as a secure long-term investment location. Sophia purchased a condo expecting consistent appreciation, but HOA fees increased significantly and insurance costs surged. Inventory increased as sellers sought to exit early. Buyers became more cautious, evaluating long-term financial sustainability carefully. Prestige remains valuable, but financial fundamentals ultimately determine market direction. Aventura illustrates how even highly desirable locations must adapt to changing cost structures. Number 1, Pensacola. Pensacola attracted buyers seeking affordability and coastal lifestyle balance. Investors and retirees viewed it as lower risk compared to larger cities. James purchased a Pensacola condo expecting steady performance. Instead, rising insurance costs, higher HOA fees, and increased inventory shifted market dynamics. Rental income softened in some buildings. Special assessments added unexpected expenses. Pensacola's shift surprised many buyers because it was viewed as safer than other markets. But rising ownership costs affect all markets eventually. Across Florida, condo markets are undergoing significant adjustment. Rising insurance costs, stricter reserve requirements, and higher HOA fees are reshaping ownership economics. Buyers are more cautious. Sellers are adjusting expectations. Investors are reevaluating strategies. Some markets will stabilize, others may continue adjusting. The key question remains whether ownership costs align with income and rental potential. Comment below which city surprised you most, and watch the next video to see which housing markets might face similar changes next.